Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we're diving into a phrase that was practically inescapable in 2024, US exceptionalism. What does it mean? Why did it dominate market talk? And is it still a golden ticket for traders in 2025? Let's get into it. First off, let's set the stage. In 2024, US exceptionalism was the buzzword of the year. Right? You couldn't scroll through financial news or overhear trading floor chatter without it popping up. But what exactly is it? At its core, US exceptionalism is the idea that the United States is uniquely positioned economically, politically, and culturally to outperform other nations. In the context of financial markets, is the belief that US assets, especially stocks, are the safest and most lucrative bets in a volatile global landscape. Right? This wasn't just hype, it was backed by hard numbers. The S&P 500, for instance, delivered a stellar 25% return in 2024, while global markets, excluding the US, limped along at just 5%. So, where did this idea come from? The roots go deep, tied to America's historical narrative of innovation, flexible labor markets, and a regulatory environment that's long favored business growth. But in 2024, US exceptionalism got a turbo boost from a few key factors. The US economy grew at a robust 2.8% annualized rate, shrugging off high interest rates. Corporate profits soared, driven by consumer spending and tech giants like Nvidia and Tesla. Add to that the US dollar's status as the world's reserve currency and the tech sector leading the AI revolution, right? And you've got a recipe for market dominance. Investors saw the US as a fortress of stability in a world grappling with geopolitical tensions and uneven growth. Now let's talk about how traders played this in 2024. Savvy investors leaned hard into US exceptionalism, overweighting American equities in their portfolios. The so-called Magnificent Seven, tech behemoths like Apple, Microsoft, and Amazon, were the darlings of the market, accounting for half of the S&P 500's earnings. Momentum traders rode the wave, betting that these winners would keep winning. And they did, with US stocks outperforming international peers by a wide margin. Some traders also capitalized on the strong dollar, which appreciated nearly 30% against the euro over the past decade, juicing returns for US assets. Meanwhile, bond traders eyed the premium on US treasuries, yielding about 2% more than German bonds, as a sign of America's economic edge. But here's the million-dollar question. Will this phenomenon hold in 2025? Right? If the answer isn't a simple yes or no, but there's a strong case for its persistence. For one, the US remains the global leader in innovation, particularly in AI, biotech, and quantum computing. Goldman Sachs recently pointed out that American companies invest nearly double what international firms do in R&D, and they're reaping higher returns on that investment. Policies under the Trump administration, like tax cuts and deregulation, are expected to keep fueling domestic growth. Plus, the dollar's dominance as the world's reserve currency isn't going anywhere soon, used in nearly half of global transactions. That said, there are cracks in the armor. US stocks are pricey, with the S&P 500's forward price-to-earnings ratio in the 90th percentile heading into 2025. America's debt-to-GDP ratio is projected to top 100%, and deficits are ballooning. Some analysts warn that momentum-driven rallies like the one we saw in 2024 often precede sharp corrections. Then there's the wild card of trade policies. Tariffs could spark inflation or slow growth, rattling markets. Already in early 2025, we've seen volatility, with the S&P 500 down 13% year to date as tariff fears spooked investors. Right? So why might US exceptionalism still prevail? It's about resilience, right? The US has a knack for adapting, right? Whether it's through innovation or policy pivots. Even if tariffs bite, right, the domestic economy's focus on middle market firms, which get 84% of their revenue from within the US, could cushion the blow. And let's not forget, global alternatives like Europe or emerging markets face their own hurdles, from regulatory red tape to geopolitical risks. US exceptionalism isn't a myth. It's a measurable edge that powered markets in 2024 and still has legs for 2025. Traders who stay nimble, diversify beyond the mega caps, and keep an eye on policy shifts could keep riding this wave, but nothing lasts forever. That's all for today's episode. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.